Welcome back, investors. Today's video is going to be about my top 3 dividend growth stocks. So for those of you who know me, you know that I really have 3 categories that I put my stocks into. One of them is dividend growth, one is dividend income, and the other is the value stocks. Dividend growth stocks, what they do is they grow their dividend at a really nice percentage consistently every year. They tend to have a lower yield though, and why is that? It's because investors are buying them for their growth. So they are growing companies who pay dividends and grow those dividends very quickly over time. My dividend yield companies are the ones who are paying a higher yield, not so much of a high growth, but I do require that my dividend yield companies have at least some bit of growth. And so the last one is value, and that basically are stocks that maybe they've fallen on hard times. Maybe the investors are not seeing them in the light of what value they bring. But for whatever reason, their price is much lower than their value. And when price is lower than value, that's when we jump in, and that would be called value investing. So I separate my investments in those 3 categories. Today, I want to talk with you about dividend growth investing. What are my top 3 dividend growth stocks? Without further ado, let's get started. Hey guys, welcome back. Kevin Burgess back again with another video. This is going to be a fun video because I'm going to share with you the top 3 dividend growth stocks that are on my watch list. 2 of them I own, 1 of them I do not. And so I do plan to buy some shares of this company before too long. So if you're new to investing or new to dividend growth investing, consider subscribing to the channel. I'd love to have you along for the journey. What I do here is I just share what I'm doing, and if you like what I'm doing, you can borrow it. If you don't like what I'm doing, at least you can say, hey, I'm not going to do that. But either way, I'd love to have you along for the journey. And at the end of the day, we're just trying to grow together as investors. We want to be successful. And through this channel, we hope to inspire you to be the best investor that you can be. So with that, let's talk about the first dividend growth stock on my mind in the month of August 2024, and that is Visa. Visa has a dividend safety rating, according to Simply Safe Dividends, of 99. This is the highest rating that Simply Safe Dividends gives. Visa is a 99. Also, they have a dividend yield, and remember we said the yields would be very low, but the dividend yield for Visa is 0.8%. It's very small yield. But check out this dividend growth. It is 16% in October of 23, very fast. Let's move down and see that they have grown in the last 5 years, an average of 16%, and over the last 10 years at an average of 18% per year. Very, very fast growth. Take a look at this chart. It is basically up and to the right. They've been paying a dividend for 15 years, and they've grown the dividend every year for 15 years. Taking a look at some of our key metrics, you can see the earnings payout ratio is very low. It's in the low 20% range. Looks to be 19% moving forward. However, I don't think that includes a dividend increase. Hopefully, we will get a nice dividend increase coming October for Visa. Look at this earnings per share. I mean, they struggled a little bit in 2020 with the COVID issues, but man, look at this growth since then. It is now just in the stratosphere. They're projecting $10.70 per share over the next 12 months. Free cash flow per share is growing nicely as well. And take a look at this. They've been buying back their shares. They had 2.5 billion shares back in 2014. And they have a little over 2 billion shares at this point. So they bought back about 20% of their shares in the last 10 years. And check out this return on invested capital. They have grown from 2020, it was 21%. It has grown up to a whopping 36% return on invested capital. Let's take a look at their net debt. Their net debt to capital is 0.09, very, very low for companies that we look at. Interest coverage is a 36, which we only need it to be 8, so they are very well covered. Let's take a look and see what some of the analysts are saying. The analysts are saying that there is a 21% upside. It's currently trading at around $260 per share as of the recording of this video. The average of the best performing analysts are saying that it would be $314, which is about a 21% upside. Now, of the 11 analysts that are covering this stock, 10 of them rate it as a buy. Only one has it as a hold. Let's take a look really quick at the valuation. I use Morningstar to calculate the fair value of my stocks. Here's what they say. They say the fair value is $272. The price is currently $260. So it is a little bit below what they consider fair value. But as you know, and as we all know, fair value is not necessarily a point. It is really more of a range. And so I think that what this means is that Visa is in a fair value range. Now, Visa is down about 6.67% over the last 3 months, about 5% over the last 6 months, and year to date, it's pretty much break even. Over the last year, it is up 9%. So why is it struggling over the last few months? I think it has to do with the economy. I think there is still some concern about a recession. If there's a recession and people are struggling, they're going to stop spending. They're going to stop using those credit cards, those debit cards, which is where the revenue stream for Visa comes in. I think there could be a short-term issue, but I don't believe that Visa is going to struggle in the long term. I am a long-term thinker, and so I do plan to pick up some shares of Visa in the coming weeks. Now, second on my list of dividend growth companies is Microsoft. Microsoft has struggled a little bit here lately, but you can notice here in Simply Safe Dividends, their dividend safety rating is also a 99. This is I didn't plan this. I didn't look for companies with the 99 ratings, but it just so happens that Microsoft and Visa both have dividend safety ratings of 99. Microsoft has a yield of 0.74%, so a little bit less than Visa's. So the dividend itself is not really going to make us wealthy, but it is that dividend growth that we're looking for. You can see this past September, they grew the dividend by 10%. Let's take a sneak peek at what they've done in the past with dividend growth. Their dividend growth over the last 5 years has averaged 10%. And over the last 20 years, it's averaged a growth of 16% per year. Those are significant growth rates. Take a look at this chart. It is just up and to the right. They have a dividend growth streak of 14 years and uninterrupted dividends for 18 years. Let's take a look at their earnings payout ratio. Their earnings payout ratio is in the low to mid 20% range, which is very, very good for a dividend growth company. Their earnings per share is up and to the right. We love that, as well as their free cash flow per share. Look at these shares outstanding. Went from 8.3 billion shares down to about 7.5 billion shares over the last 10 years. Their sales are up and to the right. Look at this return on invested capital, 30%. Now, when you compare that to a cost of capital, think about if you're borrowing money at, let's say, 5 or 6%, and you're able to turn that into a 30% gain. Think of how long and how well you'd be able to do that. So we're excited about the return on invested capital, not only for Visa, but also for Microsoft. Their net debt to capital is very low at 0.08. And their interest coverage ratio is a whopping 36.69. We love it when it's that high. Now, let's see what analysts are saying about Microsoft. Analysts are saying that they believe Microsoft will trade for $503.48 on average for over the next 12 months. Now, there are 23 analysts that cover Microsoft. All 23 of them have a buy rating. Let's take a look at the fair value. According to Morningstar, they say the fair value is $490. It's currently trading around $406. So I believe now is a good time to get into Microsoft. I think there are some good days ahead for Microsoft. And before I give you my third stock, consider giving me a note in the comments below about what your favorite dividend growth stocks are. I'd love to hear that from you. Also, don't forget to subscribe. And without further ado, my third dividend growth stock for August 2024 is United Health Group. Now, I want you to know I really did not seek companies that had 99 as their dividend safety rating. Just so happens that these three stocks, not only Visa, not only Microsoft, but United Healthcare, ticker symbol UNH, all have a 99, the very highest rating for Simply Safe Dividends. Now, the yield for United Health Group is 1.5%, so it's a little better yield. It's actually probably around what the S&P 500 yield is, so 1.5% yield. Let's take a look at some of the growth. You see that in June of 24, which was only a couple of months ago, it grew by 12%. The dividend grew by 12%. Now, when we look at the last 5 years, the growth has averaged 16%. And when you look at the last 20 years, this is really incredible, guys. The last 20 years, 41% per year dividend growth. That is incredible. Take a look at this chart. It is up and to the right. It goes very quickly up and to the right. They have paid a dividend for 31 years, and they have a 14-year dividend growth streak. Let's take a look at this earnings payout ratio. It hovers right around 28 to 30%. One thing I'll share with you, the reason I like the payout ratio, the earnings payout ratio, is if the earnings payout ratio is flat and they're growing their dividends by a big number, let's say in this case, it is growing by 16% per year over the last 5 years. So if the dividend is growing by 16% and the payout ratio, which is the dividends that are paid divided by the earnings, if that payout ratio is the same and the dividends are going up, what that means is earnings are going up. So we like to see high growth in dividends and flat payout ratios. That is a key to success. And so let's test that out. Let's see what the earnings per share is doing. Look at this, up and to the right, significant growth in earnings. And they are passing some of that along to shareholders, and that's what we like from a capital allocation perspective. Sales are growing in the, 12, 13, 15% range. You can see the sales are up and to the right. Let's take a look at return on invested capital. Not as strong as Microsoft, but hey, 18%, if you're borrowing money at 5% and you're getting an 18% return on that money, who wouldn't do that every day of the week? I would do that. Their net debt to capital is about 31%, so that's not too bad. And their interest coverage ratio is 9, a little bit above our 8. We'd like to see that a little bit better, but it is very manageable. If it's above an 8, they are very capable of managing their debt. Let's see what some of the analysts are saying about United Healthcare. There are 11 that follow United Healthcare. Of those 11, 10 rated a buy, 1 rates a hold. They're saying that the average price they're expecting is $571.80. It's currently trading at $558. So they're saying there's about a 2% upside. You can determine whether it's the right timing or not. If it's not now, maybe it's something you put on your watch list and wait for a pullback. Let's take a look and see what Microsoft says their fair value is $550. They're currently trading at $558.76. So they're in that fair value range, but they are a little bit on the higher side of that fair value range. But sometimes you just got to pay for quality companies. There you have it. Those are my 3 dividend growth picks for the month of August 2024. The next video, which will be next week, I will lay out for you what I believe the top value picks are for August of 2024. So look forward to that video, and I will see you on the next one.